Good evening and welcome to the conference call of Hindustan Unilever Ltd. We will be covering this evening results for the quarter ended 30th December 2018. On the call from the HUL end is Mr. Sanjeev Mehta, Chairman and Managing Director, and Mr. Srinivas Phatak, CFO HUL. As is customary, we will start the presentation with Srini sharing aspects of our performance for the quarter and then hand over to Sanjeev for him to share his perspectives on the business performance. Before we get started with the presentation, I would like to draw your attention to the safe harbor statement included in the presentation for good order's sake. With that, over to you, Srini.
Thanks, Suman. Good evening, everyone. From an agenda point of view, we will be actually capturing the four things that we're going to talk about. Strategy in quarter, year-to-date 9 months, and a quick view in terms of how we look the near-term future. So when you see from a category and from a strategy point of view, I think there are two very clear pillars. I think really making sustainable living a common place and putting it at the center of what we do. I think that's clearly a big thrust. We have been talking about it for a long time. And being true to our growth model, which is one of driving growth, which is consistent, competitive, profitable, and responsible. Now let me talk through in terms of the December quarter performance. Therefore, I'll carry it through in terms of where we see the market conditions and a little bit about our own performance. From a market point of view, demand was stable during the quarter, and rural has grown ahead of urban by about 1.3 times. You'd also appreciate that there was significant volatility from a crude and a currency point of view. If you were to see it from September quarter, crude was sitting at highs in terms of 70, then we saw it going all the way up till 80, 85. Saw it retrace to 50, and there's been a bounce back. So there's a fair amount of volatility, which I think also became an important element as we went and navigated the business. In context of these two, I think HUL has delivered a strong volume-led growth performance, and we're quite pleased with the results. We had shared earlier, and you'd also appreciate that the HUL board had approved the merger of HUL with GSK Consumer India, subject to regulatory and shareholders' approvals. We have started our progress in terms of securing that, and we expect this to be completed over the next 9 to 12 months. When I see from, therefore, giving a bit of flavor in terms of the results, domestic consumer growth was at 13% with underlying volume of 10. Our EBITDA margins at 2,046 crores was up 22%. Reported margins were up by 170 basis points. Intrinsic would be about 140. There is a 30 basis points impact which has come because of reclassification of fiscal refunds between other income and other operating income. And we'll touch upon that a bit later in the presentation. All in all, I think the volatility in crude and currency was very well managed. Therefore, with mix improvement and operating leverage really aiding margin expansion. Our PAT BI was at 1,401 crores, was up 17%. Net profit at 1,444 crores was up 9%. And I will give you a bit of a flavor on the exceptional items in due course. I think it's important when we talk about the whole elements of volatility and what is coming through today and from a macroeconomic point of view. I think it becomes very, very critical that we run this business with speed and agility and across the value chain. I think, and therefore today with all the investments that we've done in capabilities over the last few years, I think we are very well poised to manage this and navigate the business. I think we've called out a few examples, whether it's in terms of speed to market, in terms of faster landing of innovations, or our ability to by taking inventory down to be more agile and responsive. I think there are two examples. Similarly, I think the way we are able to enhance the reach and quality of our distribution is also serving us well. Our saving engine continues to fire, and I think that is also giving us enough levers to manage the overall shape while maintaining our competitiveness in the business. Now, from a divisional performance point of view, it's been broad-based growth and good growth across all our three divisions. Home care has grown at 16% with double-digit volumes. Beauty and personal care has grown by 12%, premiumization-led. Foods and refreshments has delivered a 9% growth on strong performance in refreshment. This obviously excludes the turnover that we got from Aditya acquisition, so we're giving a like-for-like comparison. If you were to include that, you will be in double-digit, but on a like-to-like basis, the F&R business has grown at about 9%. I think you're well aware, most of you, that innovations and activations continue to be key to how we run the business. We have seen some interesting innovations from a skincare point of view. We had a good activation from an LGRA. We've also had some new launches, be it hazelnut in terms of Magnum, or mouthwash through close-up in a few markets, and Rexona and antiperspirant. And Sanjeev will give his perspectives when he talks in his opening comments on some of the innovations and activations during the quarter. Some quick comments about some of the individual divisions. I think the home care, the whole well-oiled machinery has continued to work and continues to work well for us. Fabric wash, the focus on core premiumization has yielded strong results. Household care, the growth momentum continues, led by increased category penetration of bars in rural markets and with the urban upgradation story on liquids. And I think these two have again had a very, very strong quarter and have driven a lot of the growth from a home care point of view. In the purifiers, and I think we have talked to you also in the past, that the market has continued to start reshaping towards the UV and the RO segments. And for some period of time, the gravity business has really been slowing down and actually degrowing. In line with the strategy of continuing to meet the consumer needs and get a viable business proposition, we are focusing our investments into the mid and the top range, and we will be gradually phasing out the gravity segment. In our exceptional items, there is about 40-odd crores of restructuring which has been taken into account with respect to the phasing out of gravity segment. While the devices we will phase out over the next couple of quarters, we'll continue to service the existing machines because a lot of machines already in the market from a germ kill kit point of view and from a servicing point of view. We will keep that going for the next couple of years to make sure that all our consumer needs are well taken care of. Yeah. When I come to beauty and personal care, I think it was really a premiumization-led growth across our various segments. In personal wash, we have seen that it's the premium segment for one more quarter, and the differentiated proposition on freshness and naturals. Lifebuoy was relaunched towards the end of the quarter with renewed communication. Skincare had a very good quarter with strong double-digit growth. There was robust growth in the winter portfolio. And across our portfolio, we launched many rupee 10 variants and tub formats. Hair care again had a strong growth. Dove was relaunched with new formulation, variants, and communication. Color cosmetics, as has been the case for many quarters now, continues to drive growth, continues to drive very strong volume-led growth. We've seen that trend play through in the quarter. And I think the brand is doing a fabulous job in terms of meeting the aspirations of women across the country. Oral growth was decent on back of good performance in North and Central. Close-up mouthwash was launched in South. Deodorants had another quarter of double-digit growth, and we've launched men Rexona antiperspirants in markets of Tamil Nadu and Bangalore City. Foods and refreshments performance was led by refreshment. Again, opportunity at the bottom end with Taza and driving premiumization through green tea when it comes to beverages. Ice creams, we've continued to sustain the growth momentum and delivered a quarter where we've done well. Foods, I think we've maintained a steady growth trajectory, and the market development continues to be the big opportunity to really unlock penetration there. I'll now talk a little bit about segmental performance, and I think it's important to understand that these are not exactly comparable when you see it from a USG point of view, because in segmental results, you also factor in the restructuring expenses. When you look at it from an EBIT point of view, while on the P&L face of it comes in EBIT as an exceptional item, when it comes into segmental, all of these are also broken back into the respective divisions. So when you see from a home care point of view, the health, I think it's important to appreciate that the core margins in terms of home care and HSC have been very, very healthy. I've talked about the restructuring impact of 40-odd crores in the quarter into the water side of the business, which has come through from a margin point of view. When you look at it from beauty and personal care, I think the whole model of driving growth through premiumization and market development is yielding good results, and I think we've maintained healthy margins. In case of foods and refreshments, again, from an exceptional item point of view, we also started to book some mergers and acquisition costs related to Aditya and also related to the GSK acquisition. So some of these costs have come through. Important to appreciate this because as we progress over the next few quarters, we will continue to see some costs relating to integration as we take next steps, and they will get reflected into the segmental margin. I think there's an important element for all of you to understand. You will see that on the core part of the business, you will see strong growth numbers. But exceptional line, as I said, for two reasons, you will see some numbers as we go through our supply chain restructuring, given some of the plans that we have over the next 4 to 6 quarters, we will continue to see some exceptional items coming through, which obviously aid the overall financial growth model. So when I see from a December quarter summary of business performance, our consumer growth has been at 13%, and with EBITDA margins 170, we've talked about the respective lines. And I think maybe if I spend a little time in terms of fiscal refunds and government grants, I think this has been a topic which has been it's been moving lines to that extent. It's been a little confusing. We appreciate that, not our preferred position. if you really see that fiscal refunds had been classified into the other operating income in June quarter and earlier quarters. In September quarter, pursuant to certain clarifications from the institute, these were moved into other income. Having said that, with further engagement and deliberations, these are now being reflected back into another operating income. I think the right place for them to belong is other operating income because they come primarily from our operations. These are fiscal refunds in terms of our units in Assam and others where we have to pay and then actually claim back the GST. So that has had an impact of about 30 basis points on our margin, and therefore our EBITDA for the quarter is actually 140. Yeah? From a 9 months business point of view, I think our consumer growth is at 14% and comparable EBITDA margins are at 140 basis points. Looking ahead, into the near term, we expect demand to be stable. Having said that, I think the macroeconomic environment continues to be a key watch out, whether there is elements coming through from international factors or a consumer confidence looking at from domestic factors given the various variables at play. We're getting into national elections, we're getting into a next few months which is going to be critical. And I think therefore it will be an important element to keep an eye on the consumer sentiment. And both these elements could have an implication from both from a cost side as well as demand side. Having said that, it's important to be clear that today as we see demand conditions to be stable. And our strategy remains unchanged. It is focused on volume-driven growth and improving operating margin. And our model, which is one of driving consistent, competitive, profitable, and responsible growth. And I will hand it over to Sanjeev for his perspectives on the business performance.
Thank you, Srini. Compliments of the season and wish all of you a very happy and prosperous new year. The last couple of quarters have seen demand stabilize and the same sustained this quarter, and we were happy to see rural leading urban growth. There has also been significant volatility in crude and currency rates, which has kept us watchful on the market developments. For HUL, the big news, of course, was the proposed merger of GSK Consumer Health with HUL, paving the way for HUL to be one of the largest F&R businesses in the country. We believe this is a very strategic and transformative deal, will create significant shareholder value through both revenue growth and cost synergies. From a quarter performance point of view, I am pleased to report a current quarter performance of 13% domestic consumer growth backed by 10% underlying volume growth. We have also had robust bottom line delivery and another quarter of EBITDA margin improving. Now moving on to the segment-wise performance. Home care continues its strong growth momentum. I think fabric cleaning or laundry is a great example of how a focus on strengthening a core, market development and premiumization have all combined on the back of some great purpose-driven communication, which has resulted in truly superior performance. Through focus actions in parts of central and north market, we are driving premiumization in rural areas, which has become a key driver of growth for the category. The opportunity for growth in liquids, be it in fabric conditioner or in detergents, is massive, and we are seeing sustained momentum building in this segment as we continue to drive penetration. The household care category has been delivering strong performance in the last few quarters, with penetration of bars increasing in rural markets as consumers move out of proxies and unbranded dishwash bars. This is another category where we are seeing a very strong premiumization trend with a move towards dishwash liquids. The Domex liquid relaunch is performing well and we are seeing sustained growth. In the quarter, we have also launched the ₹2 sachet of Domex powder in Tamil Nadu and AP. To underline the importance of hygiene in our homes, we launched the largest repository of cleaning hacks for Indian audiences on a brand-agnostic website called Cleanipedia.com. It offers over 500 articles and videos in English and Hindi on topics ranging from laundry, bathroom cleaning, and enhancing sustainability at a household level. I would definitely urge you to check it out, and I'm certain you will find something useful. We had also communicated in the last quarter earnings call that we are realigning our strategy on water purifier segment. We have now decided to keep our focus on the premium part of the portfolio and phase out gravity purifiers. Given the immense need and potential of water purifiers in the country, we are committed to cater to the evolving needs of the consumer in this segment. Now moving to beauty and personal care. BPC saw double-digit growth this quarter led by premiumization. In personal wash, Lifebuoy was relaunched with a refreshed mix, and Lux celebrated its 90 years anniversary. Coinciding this, we hosted the 3rd edition of Lux Golden Rose Awards to celebrate the women superstars in Bollywood. Graced by some of the biggest male and female stars of Bollywood, LGRA was the highest rated award show of 2018 and will help us in strengthening the equity of Lux with consumers as the beauty soap of the stars. Winter, as you know, is a key season for the skin category, and it has been an excellent quarter of growth for the business across moisturizers and body lotions. All the innovations launched during the quarter, be it the Rupees 10 moisturizer range in Pond's, Vaseline, VPJ or Lakme Live Love, have done well. Hair care too saw strong performance this quarter. Dove was relaunched with an enhanced formulation and new communication which carries the no digital distortion mark, reaffirming the brand's commitment to portrayal of real beauty. In color cosmetics, Lakme continues to build on its innovation funnel and delivering excellent results. The premium Lakme products is performing well, and so is the entry brand of L18. The e-com channel is emerging as a key growth driver for the category, and in the quarter, we have also launched our own direct-to-consumer platform. In oral care, Close-Up launched the Free to Love campaign to promote closeness across the society. The campaign, which features the stories of real couples who have broken through the barriers of age or caste or gender, received positive word of mouth on social media and is yet another example of purpose-driven, differentiated and socially relevant marketing campaigns. Deodorants had a strong performance with both Axe and Rexona doing well. We continue to focus on market development in the antiperspirant segment through the Rexona Confidence Academy. And we have reached out to a few lakh students in West Bengal, training them to be ready for the all-important job interviews. Foods and Refreshment Division delivered good growth across categories in the quarter. In foods, we continue to grow steadily in a core portfolio of jams and ketchup while investing in market development to drive penetration. In refreshment, a portfolio strategy of making differentiated products, straddling the price pyramid in tea, and catering to the palate as per the winning in many Indias is doing well, and all the key brands have delivered strong results. Red Label furthered its key purpose of promoting inclusiveness by having a special performance of Six-Pack Band 2.0 in the popular show Kaun Banega Crorepati. Coffee delivered good growth in modern trade, and we continue to invest in market development in the South through home-to-home outreach. Ice cream and frozen desserts had a robust delivery across geographies. We launched Magnum Hazelnut in West Bengal. The integration of Aditya Milk portfolio is progressing well. In summary, a strong quarter to end the calendar year. The YTD performance for the fiscal year has also been very robust. As we step into 2019, I'm confident that we have the right mix of strong core, consumer-relevant innovations, a strong innovation funnel, and the thrust on market development initiatives will continue to drive growth. Our continued focus on building digital capabilities across the value chain in line with our reimagining HUL vision makes us confident of delivering on a strategy of consistent, competitive, profitable and responsible growth. With that, I would like to hand over the call back to Mrs. Hegde.
Thanks, Sanjeev. Thanks, Srini. With this, we will now move on to the Q&A session. In addition to audio, as always, our participants have the option to post the questions through the web option on your screen. We will take those questions up just before we end. Before we get started with the session, I would like to remind you that the call and Q&A session is only for institutional investors and analysts, and therefore if there's anyone else who is not an investor or analyst but would like to ask us a question or engage with us, please feel free to call us or reach out to us to the investor relations team here. With that, I hand over the call back to Ali.
Thank you
Ali,
very
over
much.
to you.
Sure. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the attached tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. This is Percy here. Congrats on a good set of numbers. Sir, my first question is on your supply chain logistics arrangements post GST. Understanding was that earlier we needed to have warehouses in each state to avoid interstate taxes. Now the entire network can be optimized because this constraint has gone away. It's been about 18 months since GST has been implemented, so just wanted to get an update as to where we are in the journey. If you could share any kind of either data or at least a flavor on where we are, how many warehouses have we cut down, what kind of savings have we generated, and how far are we in this journey of reorganizing our network?
So thanks, Percy. It's just that sometimes I get confused. You come up with a different... So did you get the right company from where you came from? I just got a little confused. Coming back to your question, progressing well. I think if you remember, we had called out saying that it's going to be a medium-term journey. We had started, let's say, specifically we had started from distribution centers being at about 40. And our long-term destination is come down by half, closer to 20. As you speak today, we have restructured or closed some 12 of them and we sit at 28. And there is a clear plan which takes us forward. So I think that's clearly progressing well. And I think it's also given us a lot of opportunities in terms of working with our own supply chain partners. It's not only on the logistics warehouse side, but there's also a lot of work which is happening on the material side and the procurement side of the equation. As people are again reworking their own supply chains at the back end, we are able to work all of that through to take costs out. I think all in all it's progressing well, and I think this is something that we'll continue to look at because I think now this starts to give us newer opportunities. I think from a savings point of view, I think we will not call out separately what is the impact of this. Having said that, I think there's also an enabler for us. As we've been talking about 6 to 7% of growth, savings that we have been talking about, there's also an integral to that.
Right, sir. Any sort of guidance you can give as to how many more quarters till this journey is completed, or you'd refrain from that as well?
So look, as I said, from a supply chain distribution network point of view, there could be 3 to 4 quarters. Having said that, we are also now looking at some of our broader supply chain, whether it's our third parties, whether it's our own units, and I think that is something which is going to be a bit of an ongoing process. If you recollect, and that's what I think we said that I think even previous quarter, or the quarter earlier to that, over the next 4 to 6 quarters, we need to continue to start seeing some restructuring costs which will also come in exceptional items, because this is a journey which will go beyond just the pure distribution setup.
Okay, understood. Sir, next question just on how to read your seasonality going ahead. If I look at your longer term trends, generally the Q4 sequential growth is anywhere between 0 to 2%. Last year was an aberration where your sequential growth was 8%. So just wanted to understand, was there any particular reason for the seasonality to change last year, and is that a reason which will sustain into the future?
So look, I think the way we really look at the business is underlying demand factors and a very robust S&OP system, Percy. Yeah? And it's very difficult for us to now start reading, as you're right, because last year it was a different phenomena playing out. But when we see it from a simple S&OP point of view, underlying demand factors, I think this is the right reflection. Actually, going forward, it's becoming a little difficult to call for the reasons which I said. While at a base demand, okay, there are 2 aspects to this. In one side, there was a bit of a benefit which all of us got, and we believe we got a bit more as we came out of demonetization, GST, and we did a flawless execution. And it did the right things by passing on the benefits to the consumers. So I think we all got a lot of benefit of that. So to that extent, that incrementality may not be there going forward. It really comes down to really leading market development and doing the right things. And I think we are focused on that and we're doing it well. And also for some of the reasons that I called out, we need to watch out on some of these external factors as they play out from a macroeconomic environment. So at this stage, I think it's going to be a little difficult to call out sequential numbers or how you should reach a growth trajectory.
Right, sir. And one last question, if I might squeeze in. How do you look at the competitive environment going ahead? About 6 months back, we've seen a slight increase in the competitive environment in premium detergents. Also, we were doing some surveys on the ground. We have seen generally that players who have either lost market share or are more aggressive in the marketplace, they have been sort of taking price cuts while the general trend has been to take a price increase. So, what we have picked up, for example, is that Godrej number 1 versus Lux, the premium is sort of changing, and Godrej number 1 is sort of becoming relatively cheaper. We have seen that in Parle versus Britannia also. So, do you think there is any risk going ahead that there is a little more pressure in terms of being more competitive on the pricing front, and if so, does that sort of change the trajectory of margin expansion going ahead?
So a couple of things. From a competitive intensity, and if you see the last couple of quarters, has there been any overall big shift or big change? There hasn't been. There are times where we see some players being active in a few categories and segments. People looking at us also will find that we are also being aggressive and intense in some of the categories.
Yeah.
So therefore there is one of that element, and I don't think at an aggregate there has been any big change which has come through. So this is going to be the nature of the game. If there is good growth opportunity and if there is good value creation as the FMCG sector has demonstrated, it's only fair that everyone will play. So I think that's fair. The other element also to watch out is that as you go through some of this volatility in commodity cycles, it also becomes a tricky piece to call out a trend in the short term. Because I think the December quarter was a very interesting one. Where would you really price? Would you assume that crude is at 60 and price it, or 65 and price, or 55 and price? Which would also mean that, look, each one is executing a certain strategy. I think you will see a more clearer picture emerging, provided you see less volatility and a bit of stability there. So I think that's an important aspect to keep in mind. But at an aggregate level, I think we are there or thereabouts. I don't think there is any need to really call out any step up to intensity at an aggregate level.
Understood, sir. That's all from me. Thanks and all the best.
Thank you, Percy.
Thank you. The next question is from the line of Amit Sinha from Macquarie. Please go ahead.
Yeah, hi sir, thanks for the opportunity. My first question is on your 10 rupees SKUs across various brands, especially in the beauty and the personal care segment. So the question is, are these launches region specific with more focus towards rural markets, or this is across India? And secondly, while the growth impact is very clear and has to be positive, but can they have an impact on the margin profile in the medium term, especially in the context that last 2 quarters gross margin of yours have contracted? Yeah.
So look, I think they have a role to play, and I think many of these facts can start to become very good facts to read market development. They also drive a lot of penetration. And I think therefore it's important in categories such as skin care to get a lot more people into the category, and then you can in due course start to play the upgradation story. So to the first question, yes, we have launched many of this and they will be national. Second is that I think when you look at our own portfolio, I think there is a clear play in terms of different packs and different margin structures, and therefore the important piece is the holistic category margin or the holistic brand margin. From that point of view, I think A, we are comfortable. B, we've all said that, look, when you look at a beauty and personal care, by definition, these are high operating margin businesses. So even if when we grow these segments faster, we also start to get an overall mixed benefit, if not anything else. So to answer the question, drive market penetration, we are happy with the gross margins that these rupee 10 packs make. They fit in very well with the overall category of brand margins. And I think that's the right way to really drive our growth model.
Yeah, and if I just add to what Srini is saying, never look at margins from an SKU basis. We always look at it from a portfolio perspective. There are many packs we launch to drive penetration. There are some packs we launch to drive premiumization. And they have a strategic role to play. And then also you have to remember, we now have a winning in many India strategy when we focus on certain geographies and clusters where it is more relevant.
Sure. Sir, secondly, I just missed the operating income and the other income accounting part and the adjustment which you mentioned during your commentary. Can you please repeat that?
So look, in interest of time, because I clarify, what I'll simply say is that at a PBT level there was no issue. There was an impact of about 30 basis points. So our reported EBITDA is a 170. You can read it as 140. Cumulative YTD, no issue. We had a bit of a reclassification in September, which has gone back to its original position in December quarter. Yeah, 30 basis for the quarter, YTD, no issue, and overall healthy.
Sure. The base quarter had an adjustment. That is the question.
Why don't you just pick it up with Suman and reach her separately, and if there are further questions and people are not here, I'm happy to clarify, but otherwise just pick it up with Suman, please.
Yeah, thanks a lot, sir. Thank you.
Thank you. The next question is from the line of Alok Shah from Edelweiss. Please go ahead.
Thanks, sir. This is Abneesh here, and congrats on great sort of numbers. On coffee, again, no comment. So Taza is mentioned, green tea is mentioned. Why no comment on coffee?
So look, it also becomes a very call out. It's been a reasonable performance from a coffee point of view. But when you see on a relation to some of the rest of the beverages portfolio, there's a clear call out in terms of something which has been a standout. Unless Sanjeev has got a different perspective.
Yeah, you're absolutely right.
Overall happy how it's performed. Do we want it to be better? Of course we want it to be better.
But just like you, Abneesh, I also love our coffee brand.
That was useful. Second, sir, if I see winter started quite late and then it picked up significantly, you have seen very good growth here, while some of the peers have said this has impacted Q3 demand. So what has gone right? One is inventory days for you is down 20% versus historical. Has that helped you to come back in the market stronger, or is it the tubs format or the 10 rupee variant? What has worked?
You know, our skincare strategy has been working well for the last several quarters, Abneesh. It is very focused on identifying the consumer needs and specific to each cluster. And it is not a performance which is just shown in December quarter. Skincare has done remarkably well in this entire last year. And what you see now is a culmination of that.
But earlier, delayed winter used to impact most companies. Will it be fair to say now that this is no more an issue, that delayed winter still, because your market intervention is faster, that's no more too much of an hindrance?
No, we have planned for the winter very well. Yeah, and while there are pockets where it got delayed, but the winter also, if you remember, came with a pretty high intensity.
And sir, cost related to merger, you highlighted in initial comment that there can be some cost in the coming quarters also. So when the GSK acquisition happened, there was a confidence that 800 to 1000 bips improvement over the longer term, that could be the improvement in margins for GSK. Any change to that, because now some more time has happened and you highlighted that there could be some cost related to merger in coming quarters?
So look, two pieces. That's how you will get the operating benefits from an operating line. As you go into a large M&A integration, you'll start with a lot of costs which are truly exceptional in nature. Yeah? So initially, to begin with, we'll have a lot of legal fees, stamp duty, integration teams. So you will need to put all of these costs into play to create the bandwidth, the organization, and the capability. So you will need all of that. And therefore, they will all come in as one-off costs. And structurally, when you look at an operating margin increase, you will see a big margin increase. So there is no change. So there's no change to the 800 to 1000 basis points what we have called out. Having said that, merger will involve a lot of costs, and they will continue to come through as we get closer to the journey and after. But the overall business case factors in all of this, and it's still a transformative acquisition.
The last question on FDI regulation, it's becoming quite stringent with cashback and discounts becoming quite difficult from February. Now, this has been growing exponentially for you and most other FMCG companies. Do you expect that growth will become much tougher in the scenario, or you see customers seeing this irrespective of discount, irrespective of cashback, so the growth should continue in spite of the change?
So I think let's see for how that thing emerges, Abneesh. At this stage, I think, yes, there have been a certain set of regulations. I think the impacted players are some of the e-com guys, and they are working it through. And I think it's best for us to now wait and see how that comes through and how it pans out over the next few weeks and quarters before we comment on the overall impact to us. Overall, consumer demand is stable. I think the channel may vary a bit, but let's see what the regulation and how it comes.
Yeah. And the underlying benefit of e-commerce, which is convenience and a wider assortment, that benefit does not go away. And also, one has to understand that the entire sales you do on e-commerce is not incremental. Yeah, it cannibalizes other channels as well.
And one small follow-up on the fabric wash, you highlighted premiumization. Now, on the competition side, Tide new variant has come up, which is still at a premium to your product, but the premium has reduced. So, any impact, you highlighted premiumization, but any impact on the competitive intensity in terms of, say, market share?
See, Avnish, this was a question which was also raised last time. And, you know, our Surf Excel is such a powerful brand, and consumers see massive value in it, and that is the reason why our largest brand keeps growing at a scorching pace.
Okay, sir, that's all from my side. Thank you.
Thank you. The next question is from the line of Vivek Maheshwari from CLSA. Please go ahead.
Hi, good evening, everyone. My first question is on the home care business. After long, we have seen let's say, slightly lower or, let's say almost flattish margins, whereas, the margin expansion has been quite impressive in the last 7-8 quarters. What is your, and Shini, you have mentioned in the past, today also you have repeated this fact that, volatility on commodity side does impact decision making. So how should we think about, company margins as well as, detergent margins specifically?
I think overall there's been no change to the way we've been talking either about a company margin, Vivek, or from a home care point of view. I think we are now in a range of healthy margins when you see home care, and it doesn't matter whether we are talking about a 14-16%. I think overall, if you see, I think you need to be prudent on how you manage, and you don't manage it for a quarter to quarter, but you do fundamentally the right things. So overall, if you see, I think we are happy with the way the whole financial growth model is working through all the three divisions, more so in case of home care. And I think we continue to be committed to driving top-line growth and increasing operating margins. No change to that picture at all.
So, in the context of whatever volatility that we have seen in the crude prices, let's say volatility even in currency, you still hold on to your modest margin guidance, basically?
Yeah.
Okay, that's good to know. Second, on other expenses also, it has been, I don't know how many quarters, but you have been in that tight band, leaving aside the seasonality bit. Do you still think that there is, should we be, let's say, building in, expansion in this head, or there is still, juice left here and the growth can be, or, the expansion can be slower than, let's say, the top line growth or whatever? I'm sure fixed expenses will, will still see an increase, right?
That's a lovely question. Again, without getting into the guidance side of the equation.
Right.
Yes, there are a couple of elements to it. In some manners, we will have to invest for the future because it's just not about taking costs out as we are investing on our reimagining HUL agenda. There is clearly increase that we are doing in some of those costs. Having said that, I think the whole savings program and the engine is continuing to give us benefits. The whole data and digital strategy is continuing to give us benefits. So look, I think what we can tell you is that we will keep a very tight rein on our costs, both from an efficiency point of view and driving effectiveness point of view. Yeah. And then let's see how it goes, because anything beyond that will start to get into giving specific guidance on lines of the P&L, and which you guys are aware that we don't do.
Okay. And lastly, on the EBIT growth in food and refreshment, is it just a function of, the margins in the base, or there is something more to it, the 40% EBIT increase that we have seen this quarter?
It's a base issue. Yeah. If you really see from a sequential point of view, I think it will be more a reflective impact. But if you see December quarter last year, you're coming off a low base in terms of margins.
Got it. Thank you and wish you all the best.
Thank you.
Thank you. The next question is from the line of Sanjay Manial from ICICI Direct. Please go ahead.
Hello, sir. Congratulations on good set of numbers. Just one question. We have seen, 5 consecutive quarters of double-digit growth now. I think some of the quarters, obviously, because of the base was low. But I think this quarter, the growth has been on a high base itself. So do you really think that mainly because of the, the rural growth is coming because of the a lot of government spend is happening aggressively before elections? And what would you think that will this really change after election, and, the government spend also in the rural sector can come down, and then probably that indirectly impact our growth also?
So look, I think there is a step up in growth has been happening over a few quarters, and I can't really attribute it to pre-election spending or any differentiated factor. If you see some time ago, rural was growing below urban. For the past few quarters, we have seen rural now grow faster than urban, and that's helpful. The other thing also is that there is an ability of an organization like HUL to really lead market development and actually get the bigger size of the opportunity which is going on. That's also been a big factor in terms of some of the growth numbers that you've seen. It's not a simple story of markets have recovered and therefore you've got it. There is also that ability of what you do it as an organization. So we've talked about it. I think it's been good so far. All our division, and it's been broad-based. So I think we're comfortable there. I think today the demand outlook is stable. But we've also called out, saying that there is a lot happening in the macroeconomic environment and potentially how consumer confidence plays out. I think these two become important elements for us to see as we go forward. First, for now, I think demand is stable and we are pleased with the performance.
Okay. And if you also can quantify what would be the contribution of the rural sector, say, in our revenue, will it be?
We haven't shared a specific number in the public domain in terms of a split between urban and rural.
Okay, perfect. Thank you.
Thank you. The next question is from the line of Pulkit Singhal from Motilal Oswal Securities Limited. Please go ahead.
Thanks. This is from the asset management team. Congrats on a good set of numbers. When you mentioned about reach and quality of distribution is helping, can you please elaborate a bit on that, and also what would be the strategy on this front for the next 1 or 2 years?
All right. When we look at quality of distribution and reach, one is a continuous thrust on having a quality direct distribution. So we keep looking at what are the outlets with the higher potential where we need to service them directly. The second important bit is, it is not just about reaching them, but we also need to increase our assortment in the stores and as far as possible bring in technology so that we have the right assortment in each store. So that is the focus that goes in terms of improving the quality of distribution. And that will continue unabated because general trade, while the growth rate in that channel may be lower than modern trade and e-commerce, will still remain the largest channel for years to come.
In terms of reach, do you see enough scope for expansion in the next couple of years? Because, you're already at the highest level in terms of the space.
Yeah, that's a very constant journey. In a country like India, you have 8-9 million stores. Then there is also a lot of stores which close and new stores open. So there is a constant journey of identifying the right outlets which need to be covered. And increasingly our focus has been on driving assortment in that store and also building up brands inside the store.
Sure. And in terms of the right price point, so you've introduced a lot of the products at 5 rupee, 10 rupee, and now even 2 rupee price points. So where are we in that journey? You have a lot of products out there. So is there...
it has to. We don't look at it from a perspective that we have a large number of products. We look at it, the role a pack has to play in a brand. Yeah, many times you use a low price point pack to drive penetration. And it often does the job of a sampling. Rather than giving a free sample, you have a low unit price pack which drives penetration. Many times you have a large pack which drives consumption. So it has to be based on the jobs to be done, and these are not packs which we introduce everywhere in the country. It is very specific to a WIMI strategy.
Right. On the food and beverage side, obviously there's been very clear, high intensity of action with the GSK acquisition, Aditya and others. Is it purely incidental that a large part of your food and beverage category has milk-related or milk additives kind of brands? Is that deliberate or is it purely incidental?
No, as you look at it, ice cream has always been a focus strategy. Yeah, and over the years we have brought in innovation, we have improved our margins, so we now have the right to grow the ice cream category, and Aditya Milk gives us some very distinctive capabilities in that part of the country. As far as the acquisition of GSK Consumer Health is concerned, that is once in a lifetime opportunity. Yeah, that's not an asset which is easily available. And getting into HFD is very strategic and transformative for the company.
Good. Thank you and all the best.
Thank you. The next question is from the line of Prasad Deshmukh from Bank of America. Please go ahead.
Hey, good evening and congrats on a good set of numbers. Just two questions. Firstly, could you could you tell us about the performance of overall naturals portfolio, plus any update on liver Ayush, specifically in packaged food and toothpaste?
So overall, naturals has done well in the quarter, Prashant. It's been a consistent strategy. When we talked about a three-pronged strategy, a lot of naturals within our existing core brands, specialist brands such as Indulekha, performed well. I think if you see on a medium-term trend, the naturals has been growing about 2.5 times the company average, in some quarters as high as 3. In the quarter in question, I think it's again had a good performance and in the same range of about 2.5 times. So that's done well. Now, your question on Ayush was that, so from an Ayush point of view, I think it's important to break it up into two clear markets. South is where we had gone in earliest, and we extended into parts of North. We're pleased with the way it's performing in South, and I think it's been a good performance across the portfolio from a South point of view. In the Hindi heartland and parts of North, we have not seen that traction. So we have pulled out of many of those markets, and we are reworking the mixes to see what we can do there, while we're continuing to invest behind or accelerate it from a southern states point of view.
Yeah, specifically in food and toothpaste, even in southern India.
So toothpaste is doing all right. I think it's doing well, actually. If you were to see from the foods point of view, it was actually a city launch which we did with some breakfast cereals to see how that comes through. And by nature, it was an experiment to see do we get traction. Not met our action standards in terms of where it's gone in Chennai. So we're also relooking at to saying is that, look, what could be a differentiated proposition. Important to highlight here that, look, some of these nature will be experiments rather than doing the theoretical boardroom experiments. They will be in-market experiments. And we see the attractiveness of the opportunity, but there's more work to be done there.
But just, adding to what Srini says, the good bit is our natural strategy has been working pretty well. We have been growing at 2x or even more in some quarters on our total company growth rate. And so our three-pronged strategy of natural, it's been a pretty satisfying journey.
Okay. Second question on this NCLT approval that you have received. This is the same one that we had spoken about, like, I think 3 years back, where you wanted to give this back to shareholders. So does the purpose remain the same yet, or there can be some flexibility at your end?
So the purpose is the same, because at the end of the day, these become now distributable reserves, and by definition, we need to give them back to the shareholders. The timing and the mode of doing it will be at the discretion of the board of directors of the company. But the objective remains unchanged.
Okay. That time I think you guys were mentioning that maybe another year or so was the timing. So now the timing is uncertain.
At that point in time, we didn't get the approvals to do it.
Correct. But right now the timing is flexible. There is no...
Right now, yes. Right now the time is flexible. Now obviously subject to the discretion of the board.
Okay, perfect. Thanks a lot.
Thank you. The next question is from the line of Chinmay Kandre from Future Generali. Please go ahead.
Yeah, thank you for taking my question, sir. So, how are you reading few macro data points which are coming out, like rural wage growth being near 3%, which has been lower for a while, and food inflation is also lower, and also reservoir levels being lower in few geographies like Western and Eastern. So, and overall farm distress being portrayed by media. So how are you reading these kind of data points? Because your growth really doesn't reflect all these kind of things.
So you're right. Some of these data points are important data points, and we are continuing to monitor them. Because in a manner, if you see, it's also some of the lead indicators. That's the best possible data which is available. In addition to what you've talked about, there is also a bit of slowdown that we have seen in automobiles. You're right that today the demand is stable, and we are not seeing that from our point of view as an FMCG. But these are some of the data points we'll all continue to keep a close watch. And in addition to, as I said, some of the emerging macroeconomic environment. But at this stage, we keep a close watch. But again, our demand outlook is stable. But all these elements become important as we navigate the business into the future.
Or if I put the other way around, like what is your assessment? Like why has these not being reflected in FMCG consumption?
So look, I wish we're not the econometrics or who have a pulse on everything which is happening in the country. Having said that, the demand from an FMCG continues to be resilient because these are products of day-to-day consumption. You will never see a lead impact in FMCG. But having said that, some key facts in FMCG of day-to-day consumption become very good indicators to see if there is a change to the scenario. At this stage, we have not seen that, and therefore we are saying outlook is stable. but we'll need to keep a watch on some of these data points as they come through into the future.
Okay. Thank you, sir.
Thank you. As there are no further questions, I now hand the conference over to Ms. Suman Hegde to take questions from the webcast.
Thanks, Ali. We've got 3 questions on the web option. I will not repeat any which have already been taken on the audio. The first question comes from Pranav Bhavkar, ASA Capital Management. Hi, can you share urban versus rural volume growth breakup and also trend in premiumization in rural areas? Which products or categories are seeing traction for premiumization in rural areas? And how well is the natural portfolio accepted in rural areas?
So look, I think part of this came up in terms of urban and the rural growth. I think way we have talked about is that look, rural has been growing faster than urban. It's about 1.3. I believe we've also sometimes shared in the past rural is about between 35 to 40%. I think I stand corrected. I think earlier we said we had not shared that. I think it's about 35 to 40%. But if you see, premiumization is a secular trend, whether it is urban or rural. It's just that some of our most exciting brands, when you put them in an affordable format, you also see traction in rural areas. So we are seeing secular premiumization which is coming through in urban and in rural. And again, naturals also, if you see, is again a pan phenomena. It comes through different. For example, when you take some of our soap brand, a brand like Hammam, when you start to put in some of the natural hues to it, starts to do very well, and whether it's from an urban or rural point of view. So I think in aggregate, if you really see, both these elements are playing out, whether it's urban or it is rural. Yeah. Second question, I think Percy, is coming through in something. What is the HUL Reimagine program? And we talked it in the context of other expenses. So here, I think where I will urge you to go back to the annual investor presentation that we had done when you had the annual investor day. There is a whole program which is in progress in terms of reimagining HUL for future. Clearly with data and technology led at the core, and it is touching all functions, whether it is CD, supply chain or marketing. In that context, as we are looking at building the HUL into the future, we are making investments. We talked about a few experiments, including stuff in CD. All of this will require making investments, and therefore we will incur costs towards that. So I think the pronged approach is really about investing for the future in terms of these abilities, while continuing to extract juice out of some of our existing expenses. So that's really there. Take a look at the whole annual investor deck, and you will get a very good flavor in terms of what we are talking about.
The next question is from Nitin Gupta, SBI Cap. Reason for decline in the other operating and non-operating income?
So I think one I told you is a bit of a reclassification in the quarter between what's happened between other income and other operating income. I think when you compare it from an year-on-year point of view, to some extent, which one do we pick up first? You want to talk about other operating income? So if you want to talk about from other operating income, I think some of it is really optics. We have got certain cost recovery which we do from Unilever. So how does it work? There are certain teams which are based here, and for them we charge out the cost to Unilever. So it's got no margin impact. There's just a small markup on this. As Unilever has relooked at its own organization, some of the base costs themselves have come down, and as the costs have come down, what we have charged out is also lower. So when I look at it on other operating income point of view, year-on-year comparison is about 50-60 crores lower. A lot of that is explained by this RIC, or the recovery of costs from Unilever. Yeah. And if you really see from an other income point of view, I think what comes through in other income is that we've had a bit of lower, there are two elements. We've had other lower dividend income, and in the base, if you go to previous year, we had some interest which came from some income tax refunds. Sorry, my mistake. It's really a function of the dividend income being lower. The income tax refund is a sequential effect, not a year-on-year effect. Yeah, so when you were to compare year-on-year, the lower amount is coming through from a dividend point of view.
I think the last question we have is from Shirish Pardesi. What is the impact from Centrum Broking? What is the impact of change in regulation for packing materials, use of plastics of certain grade?
I think there is a comprehensive program that we have embarked on this, Shirish, and I think we have talked about it a few times, and it's also available in the public domain. I think there is a lot of regulation which is happening in terms of EPR. I think in one manner, HUL is playing a role in terms of formulating the right EPR and having a strategy which is meaningful to manage for everyone. We are also working with many agencies in terms of collection of packing materials and doing the right things in terms of their disposal. There is also a clear program and a clear commitment in terms of how we are reducing plastic in our products. Again, some very clear standards in terms of how we are handling the multi-layer and how we are looking at recycling. So there is a clear program which is covering all these aspects, and actually HUL is taking lead in many of this, both from our point of view as well as from an industry standpoint. Yeah, and if you have any specifics on this, please connect with our investor relation team, and we are happy to clarify that.
We have one more question which has come on the line from Binoy Jariwala from Sunidhi Securities and Finance Limited. If you could kindly share your thoughts on the size of opportunity available in food solutions business and our plans with regard to it now that we are one of the largest F&R businesses in India.
So food solutions is an attractive business proposition when you see Unilever has got significant capabilities in this space globally. Even in India point of view, I think there is a good fitment that we see in terms of how we run food solutions here. If you see a few quarters ago, we had brought the food solutions team and put it integrated into an F&R teams. We are continuing to work on enhancing the portfolio. We are looking at giving value-added solutions to the chefs. And we are actually building that business by investing behind it. During the quarter, actually, Unilever Food Solutions has delivered good performance. And I think there is a bigger opportunity to tap into. As we bring in some of these newer acquisitions and as we expand the food footprint, it will give us further levers. All in all, it's, I think, an important piece. It's strategic, and we are keen to really grow this into a meaningful business proposition.
Thanks, Srini. That's all we have on the web queue. With that, we now come to the end of the Q&A session. Before we end, let me remind you that the replay of the event and transcript will be available on the Investor Relations website in a short while, and you can go back and refer to it. A copy of the results and presentation is already on the website, and you can go back and refer to that as well. With that, we bring the call to a close. So thank you, everyone, and have a good evening.